Welcome students who are taking financial accounting, and in this one video we're going to work out the assigned homework problem from the digital study guide for the appendix, the short exercises for the appendix to chapter 7, which was about um, petty cash. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. So this is the only short exercise that was assigned. All right. I highly recommend that you go back and watch the theory videos about petty cash so that you get an understanding, because even though I presented the overall concept, I have a tendency to think that these exercises and problems will be more of the application of the petty cash fund, and in other words, how we're working it out. But going back and watching the theory videos will give you a better understanding of the overall process, so that in your mind you know where you're at and where things are coming and going. Okay. All right. So 9.1 here says establish a petty cash fund with a $250 balance. Okay. So remember, in your GL accounts you're going to have cash, and then you would have like marketable securities or short-term investments as they're being called in this textbook. Then you're going to have your accounts receivable, your allowance for uncollectible account, so on and so forth. So, let's say your cash has $20,000 in it, right? And you're going to create a petty cash fund. So you'll create a new general ledger account called petty cash, and you're going to fund that account. In this case here, it's for $250. So what you're going to do is you're going to transfer $250 from your cash account to the petty cash. So your cash is no longer going to be $20,000. It's going to be $19,750. Right? Well, we're going to make that journal entry, and that's what 9.1 here is, to establish the petty cash fund. So our cash is decreasing, so I'm going to credit my cash for $250, and I have to debits equal credits, so I have to debit my petty cash for $250. Right? So that's 9.1. Oops. Okay, 9.30. The petty cash fund has $56 in cash and $187 in petty cash tickets that were issued to pay for the office supplies of $112 and entertainment expense of $75. So these petty cash tickets are basically receipts. Okay, you can get a petty cash book and write that. Every time you take cash out, you'd write a quote-unquote petty cash ticket, and you would staple the receipt to it, or you can just put the receipts in the box. That it doesn't matter which way you do that. But we have two of them. One is for 112 and the other is for 75. Okay, so to replenish it, right, what we need to do is we need to write a check and get cash. All right, so we're going to credit cash because our cash is going to decrease in the amount of $187. Okay, and now we have to decide what our general ledger accounts we're going to use for the office supplies and the entertainment, because we'll debit, and we're going to use office supply expense for 112, and we'll debit, in this case, entertainment expense for 75. So that would be the journal entry. Now remember, if you're watching the theory videos, okay, what you're going to do is you're going to write a check. You're going to write a check, whatever that number is, let's call it 111, for $187. You're going to go to the bank and you're going to cash the check, right? And you're going to get the $187. So you had your petty cash box here, and there was originally $250 in it, but now there's only $56 in it because you have $187 in receipts. The total of those two, right, is this $250. Well, now you're going to take this $187 in receipts out of the box, and you're going to take the $187 in cash and put it back into the box. Okay, so that now your box has $250 in cash, right? But you have this $187 in receipts, which is what you're making the journal entry for this check. Okay, and you're going to attach those two receipts to the check in order to have the supporting documentation for it. Okay, so that's what's happening in that transaction. Okay, and then lastly, it says we're going to increase the petty cash fund balance to 300. Remember, when the petty cash fund, the petty cash account is called an impressed account, right? And what that means is when we made this first transaction for September 1st, right, and we moved the cash from 20,000 and we put the $250 in the petty cash, the only transactions that go into petty cash, into that account, are transactions to either increase the petty cash or to decrease the petty cash from its original amount. We don't put our expenses in that petty cash, all right? So in this case here, our first entry on September 1st was to make it, to set it up for 250. Now, yes, we can increase it, and in this case here, it's going to be the exact same kind of journal entry, right? So 930, we're going to debit petty cash for $50 more, and we're going to credit our cash for $50 more, because we're going to take $50 more out and put it into our petty cash and to make it $300. Okay, so the only transactions that should affect petty cash are when you're actually increasing the balance or the amount that is in the petty cash fund. All right, you know, it was 250, now it's going to be 300. All right, and those are the only entries. Now, if 300 suffices, you know, it could be years without ever putting another transaction to the petty cash. You know, if it's 6 months down the road and you realize that you still don't have enough cash in the petty cash fund, sure, you write another check to increase the amount of the petty cash. But that's the only entry that you're gonna, only entries you're gonna make to the petty cash. If you feel that 300 is too much and you want to take some out, then you can take it out and put it back into your cash. But that's the only transactions you're affecting. You're using for petty cash to move between the cash and the petty cash. Do not put your expenses into that petty cash account. I've seen students do that, and that's wrong. Okay, so that's it for this exercise, and I will see you for these are the short exercises, so I'll see you in the next video for the exercises for Group B. And again, if you don't understand something, go back and watch the theory videos. And if you still don't, then feel free to contact an instructor.